What's the difference between stablecoins? Which one's the best? Then let's rate them at the end. This video will look at the top 4 stablecoins, each with over $1 billion in market cap. It'll look at the Circle Dollar, USDC, Tether, USDT, the Binance Dollar, BUSD, and then DAI, DAI. Then we'll hint at a little bit of novel innovation that's happening in this space for stability. Did a lot of research for this, so stick around. If you want a specific coin, hit the timestamps below. Some complain about crypto volatility. Well, enter stablecoins. But what are they fundamentally? Why do we need them? And where are the risks in each type? Because there are risks in these stables. I'll discuss some interesting history on a few of these that you definitely want to hear. Buckle up. Stables are Web3 representations of a relatively stable item. They mimic the price of. Because crypto is volatile, many see stablecoins as a safe method preserving their capital during the volatility in bear markets. All top 10 stablecoins claim to maintain a peg to the US dollar. The main reason people use stablecoins are they store value and they're not as volatile. You can send and receive fiat instantaneously anywhere, anytime, weekends, holidays, internationally, whatever. You can move in and out of stables, preventing people from moving back into fiat currency and perhaps taxes, ? Most are integrated in a DeFi and CeFi and can earn yield above treasury notes, which is like the risk-free rate. The savings accounts at my bank, for instance, pay a yield of 0.01% annually, which is abysmal. That savings rate is ridiculous. Inflation's at conservatively 8% right now. So I'm losing 7.99% on that savings account annually. If you were a couple retiring 30 years ago, attempting to live off $100,000, I've got some bad news for you. Your purchasing power has went down 53% since 1992, and you need more than double that much to live on right now. That's the true price of inflation. Stablecoins are a good way to park money in decentralized fashion and earn a yield that beats inflation. You have to know what risks you're taking and avoid this looks too good to be true, because it will bite you. All right, USDC, step right up. USDC is the first because, well, it's the most trusted of the fiat-backed stablecoins. It is backed by real-world assets held in reserve in the central party, Circle. They have about 200 million extra in reserves than the USDC token supply. What is a little odd is they only have 18% of their reserves in cash. The other 82% of the reserves are in short-dated treasuries with an average maturity of a month. Okay, that seems about right. As long as the US dollar and treasuries aren't monetae non grata, this shouldn't be an issue. Of note, this is the highest cash backing in the top 4 cryptos at only 18%. Next, USDT. Tether is the largest stablecoin with a market cap of $65 billion, which is about the size of the next 2 combined. It's by far the most liquid, with a trading volume of about $28 billion per day, more than all of the other stablecoins combined by far. That's a lot of liquidity. Tether is the longest running large stablecoin. It has a significant network effect since 2014 that it's built, and it's really gained traction in the 2017 bull market. Even with all of the FUD surrounding that and the government suing them, Tether continues to grow. People want to use it. Tether is currently backed 11% in cash, then some short-term deposits in commercial paper, corporate bonds, precious metals. All of those seem reasonable, I guess. Even the commercial paper, corporate bonds in small amounts. But they hold 9% of their reserves in loans and 4% in other investments, which include other tokens. What? Why? Does this seem crazy to anybody that Tether is backed more than 13% by loans and their crypto bets for a stable coin? Leave me a comment below. Let me know what you think on that. Fun fact for you, Tether has been sued and fined multiple times, including a $41 million fine from the CFTC stating it had untrue and misleading statements of material facts, including repeated representations that Tether would fully back the USDT token with US dollars, omissions regarding the actual backing of USDT, and that Tether would undergo professional audits. If that controversy wasn't enough for you, how about the relationship between Tether and iFinex and Bitfinex? This gets spicy. Were you in crypto back then? This is how it went down, at least allegedly. All right, Tether was created in 2014. It grows to be the main stablecoin by far and is also used in another iFinex-owned platform called Bitfinex. In 2017, Tether's international transfers from Hong Kong and Taiwan through Wells Fargo were blocked. And later, about $1 billion of Bitfinex funds were frozen in a Panamanian payment firm named Crypto Capital Corp. Let's just say Tether kept Bitfinex solvent through that $1 billion hole that was blown in its balance sheet. This extreme shadiness sounds like another financial firm that is just now unfolding FTX, and the start of significant Tether FUD, and the dollar peg decreased to around 88 cents in 2018, reflecting these very justifiable fears. According to New York Attorney General, funds were commingled with corporate and client deposits. No contract was ever signed with crypto capital. Does this sound like anything else that's currently unfolding? Bottom line, Bitfinex used Tether to cover their resulting $850 million shortfall. Bitfinex claimed this cover-up was a legitimate loan from Tether, which was repaid in 2021. Most people aware of the situation think Tether printed $1 billion without any backing and gave it to Bitfinex to ensure their solvency. Help me your research. Sorry. Anyways, let's move on. I just really love Tether, but you can see that a lot of people don't have an issue with this. Their volume is crazy. Next, BUSD. I don't want to go too deep into BUSD. It's similar to the last two fiat-backed stablecoins, but with less controversy, believe it or not, for Binance. So, fun fact, did you know that Binance isn't actually the issuer of BUSD? Paxos issues and redeems BUSD to US dollars 1-to-1. Their reserves are also kind of surprising. They only hold 4% of their reserves in US dollars, and the rest is held in government-guaranteed debt instruments and overnight reverse repo agreements. Nothing go wrong there in the repo market, right? And some of these debts are very long-term duration, 2046. You can start to see that there might be some implied risk here in these stable coins, quote unquote. They're pushing the envelope for their profit motives. Finally, DAI is a multi-collateral backed stablecoin. DAI is part of MakerDAO, a decentralized autonomous organization of the Maker protocol. Users generate DAI by depositing collateral in the protocol. DAI is decentralized, censorship resistant, and over-collateralized. I'm listening. The protocol and systems ensure transparency, stability, and efficiency. DAI once was backed by ETH only, but now it's backed by several different tokens on top of Ethereum. The riskier of the tokens, like Mana Decentraland, for instance, the higher the collateral ratio, in this case, 175%. DAI doesn't have near the volume of the other stablecoins used on the centralized exchanges, but is used frequently in decentralized applications, and is by far the most censorship resistant of the large stablecoins. People come to MakerDAO to put up collateral and borrow DAI, but you can also earn yield by lending out your ETH or tokens on Ethereum. This is done without any third-party intermediaries and is by far the least prone to funny business. But people don't seem to care, and DAI hasn't been able to keep pace with the centralized issuers. Users seem to care more about good trading pairs than sovereignty and censorship resistance. Good luck. There's a lot of different other applications for stables out there in the ecosystem, and some of them are frankly fascinating, the innovation that's going on. I'm sure that some of them will be the foundation of future Web3. If you have interest in any of these, me making a video on one of them, leave a comment below. Bancor is a concept of making a basket of multiple different currencies backing a stablecoin instead of a single fiat. Do you remember when Libra from Facebook got a face shot for trying to launch this type of coin? Terra had an algorithmic stablecoin that was not intended to be backed by fiat, but intended to keep the peg with code. Terra Luna blew up spectacularly, wiping tens of billions of dollars off the crypto map. This doesn't mean that algorithmic stablecoins can't work. It just means that they're extremely fragile, and their undoing might actually be because they were trying to hold assets in the real world, ironically. Ohm is attempting to reinvent reserve currencies by backing the tokens with assets and liquidity pool tokens earning yield. And Paxos Gold is backed 1-to-1 with physical gold bars stored in London vaults. All right, so that's the stables. Let's compare them in a speed run, side by side, then I'll rank them. DAI is the only decentralized, censorship-resistant stablecoin out there right now, so that's easy. Tether's extremely high market cap, use pairs and volume, crazy. DAI is the only one truly over collateralized, but each of these are audited at least 1-to-1, so that's good. And Tether is shady AF. DAI is not shady. Simple. So use USDC if you need a lot of centralized stable coins, maybe for yield. Use USDT if you need those trading pairs and volume. Use BUSD if you're trading a lot on Binance. And then use DAI if you believe in that decentralized mantra of crypto, why we came here. And now it's time for the ranking. USDC comes in strong at the A tier. It's the most trusted centralized stablecoin. Tether's coming in moderately well at the B tier, mainly because of its network effect and trading pairs don't hold onto it very long, folks. And then BUSD actually comes in the C tier, mainly because it's holding only 4% in cash. Come on, man. DAI rounds out the top stablecoins with an A tier slot as well. It's decentralized, but just not prominently on SEX, the centralized exchanges. Stablecoins don't have a position in my portfolio. I'm not a trader, and I'd rather get off of fiat. I'd recommend that most of you do the same, not financial advice, whatever. Only hold stablecoins you must to payroll, trading purposes, etc. Don't hold them for long durations. All right, the future is bright. Now click on this playlist here where I talk about the top cryptocurrencies. I'll rate them and then I'll say what their allocation is in my portfolio.